So as we all know, the basic function of commercial bank is to accept a deposit and to lend that money as loan. So commercial bank accepts deposit and uses that money to give loan to some another person. So commercial bank is a dealer of credit. It creates money on based on cash deposit. That means whatever deposit commercial bank has, it uses that deposit, it mobilizes that deposit and gives that deposit as a loan to some other financial institution or to some other person. So further, it issues new money through its loan operation and creates credit or expands the monetary base of the country. So whenever commercial bank receives any deposit, commercial bank utilizes that deposit and gives that money as a loan to some other person. Now that another person who receives that money as a loan may use that money in whatever requirement he has or in whatever needs he has. So further, it issues new money through its loan operation and creates credit or expands the monetary base of the country. So therefore, this process of credit creation leads the depositor to believe that they have money with the bank. Also, the borrowers believe that they own a certain amount of money to the bank. So what happens over here is, so let's repeat the example which we have studied before. So this is Mr. A. He goes to a commercial bank. Now why does Mr. A goes to a commercial bank? Obviously to save the money because he has money in surplus. So instead of keeping that money at his home or instead of keeping that money idle, why not make that money earn for us? So how can we do that? We can just save that money. We can just deposit that money in commercial bank. So let's deposit that money in commercial bank. Now let's deposit that money into the in commercial bank. So now, like Mr. A thought, instead of keeping that money idle, let us deposit that in commercial bank. In the same way, commercial bank will not keep that money idly. So suppose Mr. A deposited rupees 1 lakh into commercial bank, which he had in surplus. So now commercial bank received 1 lakh rupees. So what commercial bank will do? Commercial bank will save some part, which is we call as CRR, which is kept with RBI. Let's say CRR is 20%. So commercial bank will keep with RBI rupees 20,000. Now, how much can he give as a loan to someone? Commercial bank can issue a loan of rupees 80,000 only. Let's say this is Mr. B who requires money to start a business. So now from 1 lakh 80,000 is given as a loan to Mr. B. So what will happen now? Now Mr. B is taking a loan. Hence Mr. B will pay interest to the commercial bank. So this recent scenario or the scenario in India is this way. Interest on borrowings is higher and interest on savings is lower. So whenever you borrow money, you have to pay more interest, and whenever you save money, bank will give you some part of that interest. So what happens is Mr. B has borrowed money. So Mr. B will be paying interest to commercial bank. Let's say the interest on borrowing is 12%. So Mr. B will be paying 12% on 80,000. And interest on savings is, let's suppose, 7%. So commercial bank gives Mr. A 7% of the interest. So in between, commercial bank is earning 5%. So this is how commercial bank earns profit. So now what happened over here is Mr. B, who did not had money to start a business, now has a proper capital to start a business. So Mr. B will use that money to buy some assets. Now let's suppose he buys assets from some another person. So whenever that person sells him the asset, he will be earning money. So this is how money keeps on circulating into the market and credit creation is done. So this is the whole process of credit creation. Now what happened is here Mr. A believes that they have the money with bank. So Mr. A believes that whatever 1 lakh he has deposited with the commercial bank, it is there with commercial bank. Also, the borrower believes they own a certain amount of money to the bank. Mr. B believes that whatever money we got, or whatever money Mr. B has got in the form of loan, is the money of bank. But in the real scenario, whatever Mr. A has deposited, bank has given the same money to Mr. B in the form of loan. So this is what is credit creation.